Yay, happy Thursday, y'all. Hello, hello. Welcome. It's playoff time. If you're in Colorado, you know. It's been a very stressful series, but we're still in it. Playing tonight. Welcome to everybody. It looks like a few of you are joining live. Give me like 30 seconds just to kind of let everybody who wants to join live join live. I know most of you watch this on replay, so you hate this part, but it is what it is. So good morning, happy Thursday. Hope everyone's doing well. It's been a week, so I feel like I say that every week. It's been a week, but a good one. So, excuse me. So that is not today. Hold on. That is today. Okay. It's just I forgot to change the date. Okay. That's what happens when I do this early in the morning. Is I forget what I'm doing. So, hello. My caption's just wrong. Oh, my caption's wrong. It's fine. So today, you guys, oh my gosh, I'm with it. Hi. Today we're talking about meals and travel. I don't know what the caption says. I'll fix it later. But hello. So let's start. Let's start with who I am, why you should listen to me, and we'll go from there. If you're new here, I am Bree Beers of Bree Beers and Associates. We are a Denver-based accounting firm specializing in tax advisory and strategy. I myself am a CPA, a certified tax coach, an advanced tax strategist, and a fractional CFO. I have over 20 years of accounting experience and 14-ish, 15 maybe tax seasons under my belt. And what kind of makes me different than maybe not a lot of tax people, but some of the bigger firms out there is not only am I an accountant, a tax professional, I'm also an entrepreneur, like most of you guys here. So that intersectionality of entrepreneurship and tax expert gives me a lot of insight on how to take the tax law and really take the pieces out and figure out how they apply to you guys as small business owners. And that's really what I've been doing for the last 6, 7-ish, 8 maybe years, is really trying to not just learn the tax code for the purpose of tax return preparation, but like I said, pulling out the parts that can apply to all of us here and figuring out how to help small business owners utilize and benefit from this tax code. Sorry, last thing. I believe tax strategy and tax planning, guys, it can be the first step toward building wealth or building your business. And how I see it, if you've ever been on a call with me, I use this example is if you make the exact same amount of money in 2025 as you did in 2024, but you implement some what we call tier 1 tax strategies, you could save anywhere from a couple thousand to, 5 figures worth of taxes in this year. And that money just gets put back into your business, back into your pocket. And you can spend it to, like I said, reinvest into your business, invest into your, buy real estate, invest into your retirement. Maybe you have kiddos you're trying to save for college, but it gives you more cash without actually having to make more money. And most tax strategies, you implement it, you utilize it this year, and then it's, you can continue to use it year after year with very minimal adjustments. So that's why I'm here. Last week we did our monthly Q&A. The first week of every month we do a Q&A session. And before that, we did a 3-part tax planning prep series. If you missed that series, I suggest you go back, whether you're watching this on YouTube or Facebook, and catch it. So the 3 parts, in the first part, we talked about why now is the time to tax plan. A lot of people, you get your tax return done. You're like, okay, how can I save taxes? Definitely too late. And so people have started to think year end is a great time to tax plan. Well, there's still opportunities at year end. The earlier you can start tax planning in the tax year, the more benefit you can get from the strategies you implement, because the more time you have to spend that money in that tax advantageous way. All right, so we talked about that. So tax planning now gives you more options to save, less missed opportunities. It can also help improve your cash flow, right? If you're spending the money now and you're making tax payments based on your net profit, which you should be, and you can have more, you'll be having that more cash and you'll pay less taxes, and you'll have that, instead of paying that extra money to your quarterly tax payment, you can reinvest it back into your business. In the second part, we talked about the foundations that you need to put into place to get ready for tax planning. We talked about having a tax savings vehicle. We call it a tax savings vehicle. That's either having a business, like most of you do here in the Facebook group that we're in, or having a real estate portfolio or a farm. Those are the 3 tax savings vehicles you can have. You got to have a growth mindset. You got to be able to think outside the box with a lot of these. And most importantly, I think you have to have clean, up-to-date financials. You know, your financial data has to be legit. And then I think the last part, we squashed some tax planning myths and mistakes. You know, we always hear tax planning is only for the rich, or people are like, yeah, I'm not quite ready for tax planning. So we talked about those. And then we talked about what kind of becomes a recurring theme when you take these trainings with me is that you've got to follow the rules. And we talk about qualifying, documenting, and recording. And we're going to talk about that a lot today when we talk about travel and meals. All right. So another reminder, you guys, like we talk about the tax growth path, if you've been with me for a long time. And we talk about at the very beginning of this path is the taxpayers who don't have that tax strategy vehicle. That's the first step. The second step is, okay, how do we turn how do we turn post-tax dollars into pre-tax dollars? And then the ultimate goal, once we've kind of, we've mastered this turning, pre-tax dollars, post-tax dollars into pre-tax dollars, is how do we spend money? How do we spend the money we have in a tax advantageous way? So tier 1 is what we really focus on in these lives. And that is turning post-tax dollars into pre-tax dollars. Yes, I said it right that time. So what exactly does that mean? So guys, personal expenses, that money that you spend coming out of your personal bank account, those are post-tax dollars, right? You've already paid your payroll taxes or your self-employment tax. You've paid your income tax on it. Those are post-tax dollars. And most of the money we spend are post-tax, right? Our mortgage, our car payment, our groceries, our kids' sporting events, you name it. If it's a personal expense, we're using post-tax dollars. All right. But when we have a tax strategy vehicle in place, right? We have a business, whether it's our full-time business or a side hustle, or we have a real estate portfolio, or we have a farm. If we have a tax strategy vehicle, we can start to take some of those personal expenses and funnel some of them either partially or completely through the business, making them pre-tax expenses. Okay, so that's a key, like a fundamental thought here. So just making sure you understand that. So I'm going to say it again. The money coming out of our personal bank account that we spend on all of our living expenses, all of our fun, our travel, our food, our mortgage, our car payments, all of those are post-tax dollars we're spending. We've already paid our income tax and our payroll taxes on those dollars. Okay. So how can we turn some of that money and move it and run it through our tax strategy vehicle, right? Through our business, through our real estate portfolio, through our farm. How can we move some of that legally and ethically and spend it through our business or through our tax strategy vehicle and make it pre-tax dollars? All right. So what does that mean? And what at the end of the day, right? What's the difference between pre-tax dollars and post-tax dollars? Let's just use the 24% tax bracket. Okay. We're not even talking about payroll taxes. We're not talking about self-employment tax. We're just talking about the most common 24% income tax bracket. So if we're there and we're able to move $1 for every dollar we're able to turn from post-tax dollars to pre-tax dollars, we're saving 24 cents in taxes. All right. And honestly, once we account for payroll or self-employment tax, and even state income tax, that's closer to 40 or even 50 cents. All right. And when you're talking about $1, that doesn't seem like a lot, right? But that means for $100 that we're able to convert, we're able to save $240 plus dollars in tax, $24 plus dollars in taxes. For $1,000, if we're able to move $1,000 from post-tax to pre-tax dollars, we're saving at least $240 in taxes. All right. That can be as much again as $400, depending on our tax bracket, our state tax bracket, and are, accounting for the self-employment payroll taxes. So that's a lot of money. All right. And so and when we talk about all the ways, all the things that we have the ability to move from pre-tax to post-tax, from post-tax to pre-tax, we talk about the miles we're driving on our car, the meals we eat, the housing expenses we incur, utilities, cell phone, traveling. There's a lot of things that we can just move those dollars from. All right. So, and the thing to remember, you guys, there's not one magic pill. Okay. There is not one single tax strategy that can just save you all the money. All right. It's building all of them and putting them together. And so these first few weeks, I'll tell you, like we're starting this series, this tier 1 tax strategy series. And the first probably 3 or 4 weeks are all about just what can we run through the business and how? How can we move those post-tax dollars to pre-tax dollars? All right, in the simplest of ways. So today we're talking about travel and meals because it's my favorite. So I wanted to start with it. Next week, we'll talk about the business use of your vehicle. The week after, we'll probably talk about home office. So we'll talk about just how do we spend our money differently. And then we'll dive into what I know a lot of you guys want to talk about, and that's hiring your kids, electing an S Corp. The more complicated ones that it's still technically moving our money from post-tax to pre-tax dollars, but there's a little more nuance to it. All right. For these first 2, 3, 4 weeks, all we're talking about is spending money. Like really, it's just pulling your business card out instead of your personal card. And then what you have to do to make sure you're substantiating those expenses. Okay. So these first few weeks should be pretty easy. Fingers crossed. All right, so today, meals and travel. Started with my favorite. I love to eat. I love to travel. So that's what we're starting with. All right. So let's start with meals. So every time we talk about a strategy or how we're spending, we're going to talk about how you qualify for it, how you document it properly, and how you record it. All right. Qualify, document, record. All right. So with your food and your dining, to qualify, first of all, guys, you got to have a business purpose. Simple as that. All right. The cool thing is, though, you guys, is once you kind of become accustomed to this and you're used to like identifying when a meal or drinks out are business related, a lot of times you'll find that outings that started as with a personal purpose end up turning into a business meeting. And that's fine. It doesn't have to be predetermined. It doesn't have to be like, oh, I'm going to schedule this business meeting over lunch. A lot of times that is how it works, but sometimes it could be, I use real estate as, it's my favorite example to use. My husband's a realtor. We have a ton of realtor clients in our, client base. But a lot of times when you're a realtor, your friends become your clients, right? They're one of your biggest sources of referrals. And so you might be going out to dinner with a couple of friends, right? For just to catch up, have fun. But if at any point that conversation turns to business, right? You start talking about, I'm going to sneeze. Shoot. No, I'm not. Yes, I am. I'm so sorry. Okay. If at any point that conversation turned to talking about, but hey, we're thinking about buying a house, or hey, we're thinking about moving, we're thinking about selling, and you start having a business conversation, that meal or that outing just became a business that you just added business purpose to that meal. Okay. And I get a lot of people that are like, that sounds shady. That doesn't, I thought you had to like go into the meeting with a business purpose. No, you can actually turn a casual catch-up dinner or drinks into business if you guys start talking about business. Now, it's not a simple one sentence, right? It's not, hey, we hung out for 2 hours and for 30 seconds we talked about business. I'm going to tell you that doesn't qualify. I'm saying in that course of that meal, you have to have a substantial conversation about your business, okay? And it's not about your business, it's about how, it could be about how you could help that person, how you guys could work together. So that's the other piece is a lot of business owners think that the business purpose has to be, I'm talking to a client. I'm taking a client out for dinner. And it's actually much broader than that. All right. It's discussing, it could be discussing business with a business partner. If you're in a partnership or a corporation with another owner, discussing business over a meal. That is a meal that becomes a business expense. You might be meeting with a vendor for your business, maybe a client. It could even be a potential client, which is kind of the example we just showed of you're meeting with a friend and you start talking about something related to business. It becomes a business, they become a potential client. They don't have to become an actual client for this to be considered a business meeting. They can be a potential client. So same thing if I'm out with friends and we start talking, we hate, we're just done with our accountant. They're just not, doing what we need them to do. We need more, I'm looking for more strategy, more guidance. And we start talking about how my firm might be able to help them. That just became a business meeting. And we're talking about how we can further our relationship. Okay. So discussing business in any sort of capacity, again, I want it to be a substantial conversation, not 30 seconds, not, hey, you do real estate, cool, we should talk sometime. But, get some substantial conversation in there. You eating out alone while you're traveling, okay? The key to this is outside your normal commute. The cool thing is, and we'll talk about home office in a couple of weeks, if you have a home office, you really don't have commuting miles anymore because your home office, like anytime you leave your home, you're now traveling. So if I'm out for the day, so this does not say, hey, I want to get out of the office. I want to get out of my office and work at Starbucks. Right? I don't get to go spend all of my day at Starbucks and then write off my Starbucks trip. But if I am going out to Starbucks to meet someone, right? Maybe I have a meeting and I want to grab a coffee before I meet with them. There we go. Or let's say I'm out for a whole day. Let's say in the morning, I have a meeting with some clients down in Colorado Springs. And then in the afternoon, I have a meeting with some clients up here in Denver. All right. Well, I don't want to come all the way home to eat lunch. I'm not a lunch packer and I shouldn't be penalized for that. So I'm going to go have my meeting with my clients in Colorado Springs. Then I'm going to stop in Castle Rock for some lunch. Because I'm out working, that meal becomes a business expense. All right. Food provided in the workplace. If you have a place of business and you have employees or people that work for you and you do Bagel Mondays, right? The money you spend at Einstein's Bagels or wherever you go, that's a food and dining expense. What's becoming a little more popular now, and this is a little sketch, but I would support this, is we don't get together anymore, right? We don't necessarily work in an office, but especially during tax season, I want my team to feel, taken care of. So I will, send a $25 gift card to them and say, hey, lunch is on me today. Thanks for all the hard work. Some accountants, some people will argue that's a gift. But I would argue that if we were in the office and I was buying them lunch, it wouldn't be a gift, right? And so it's just about substantiating it and documenting it. And we'll talk about that in a second. All right, so food provided in the workplace, that's deductible. Food at an event or presentation, whether it's for customers or vendors, but any sort of event or presentation you're putting on, a client appreciation event, maybe a training, maybe a lunch and learn, any food provided at those is deductible. Food at an employee event, if we're having a training or maybe a year-end celebration, that food is deductible. One thing to remember, you guys, bar and tip and tax are included. I a lot of times see clients who are breaking this out and just like breaking out the food and then taking everything else out. No, everything that is consumed is deductible. So bar, tip, tax, all included. What is not included anymore is entertainment. All right. Entertainment is no longer deductible. So for many years, golf, green fees. We'd see a lot of green fees on P&Ls, profit and loss statements for businesses. Topgolf became popular right at the end of when we were allowed to take up entertainment costs. Memberships to different kinds of clubs or activities. Sporting tickets, that was a huge one. Businesses would buy, season Bronco tickets and, give them away to staff, give them away to clients. And that was a business expense. That is no longer a business expense. Now, I say that, but we are currently operating under the Tax Cuts and Jobs Act of 2017, which is what got rid of that entertainment piece. deductibility. That is set to expire at the end of 2025. So we may see entertainment expenses come back. That said, the Tax Cuts and Jobs Act of 2017 was passed by President Trump. He's in office. I feel like the easiest thing for him to do is just extend the Tax Cuts and Jobs Act for another however many years. So I don't know that we're going to see this change, but it's definitely something to keep an eye on. Do we get that entertainment deduction back? We'll see. All right, so that's the qualify. The qualify piece of meals is it's got to have a business purpose, whether it's predetermined or not. If there's a business purpose to a meeting or, over dinner or drinks, that's your qualifying activity. Okay. And we talked about the ways that qualifies. So document it. Documenting includes paying for it through your business account. All right. This is one of the things we preach over here, and it's keeping your business and your personal separate. All right. Especially when it comes to things like meals and travel. Things that can very easily be personal and business, gotta run through your business bank account or through your business credit card. All right. We can get away with accidentally buying some office supplies on our personal card and doing a back-end adjustment. It's like, yeah, I didn't need 400 reams of paper for personal use. Obviously, that's a business expense. Or I didn't, need, I don't know, I didn't buy a calculator. I don't know. I'm trying to give examples. I'm so bad at off the cuff examples. But a lot of times when it comes to supplies or it comes to like very business specific items, if we accidentally buy it on our personal, there's a way to fix it on the back end. Not a big deal. When it comes to things like meals and travel, we really, really want to avoid commingling those funds. We want to keep those expenses running on the business credit card or the business bank account. All right. So pay for it through your business account and then keep a calendar. I don't want to say we all are good at keeping calendars because my husband is not. And I know there's a lot of you out there that are in the same boat as him. You do not live by your calendar. You do not even keep a calendar. And so I know that this step is going to be tough for you. But it's important. So for those of us that live by our calendar, like for me, if it's not on my calendar, I'll forget to do it. I won't do it. I won't go. So my calendar, this part's easy. So in my calendar, I have, lunch at, Yaya's with Lindsay. And that is enough to substantiate should I get audited. The only thing I would go back in there, I would usually add in there is your reason. All right. So your calendar itself is going to keep your location, your date and time, probably who you're meeting with. Usually, we send an invite to the person or we're like lunch with Bob, and so your calendar, if you're doing this, to the best of your calendar's ability, the location, the date and time, and the person you're with are all going to automatically be in your calendar. What I would suggest you go back and add is the business purpose. All right. So if I'm meeting with Lindsay, who I'm working with, maybe we're having our monthly meeting over lunch. If I'm meeting with a client, I'm going to write that client meeting, potential client meeting, potential vendor meeting, whatever it is. It doesn't have to be a long explanation, just a quick 2 or 3 words that remind you why you met with that person. All right. So if you're already keeping a calendar, this is really easy. Documentation is super easy. Put it on the business credit card. Make sure your calendar has all the details. If you are not good at using a calendar, then this is going to take a little bit of a learning curve. All right. Because it is allowed, should you ever get audited, you are allowed to rebuild support documentation. But think about how daunting that is. All right. Having to go back 2, 3, 4 years later and look at your credit card receipts for all the places you went and try to remember who you met with and why you met with them and what time you met with them, right? Like that seems way more complicated than just training now to start putting things in our calendar. Okay. So that's the document part. And then the record part is it goes into your P&L, your profit and loss. All right. So if you're using QuickBooks Online or QuickBooks or Xero or anything like that, it's as simple as, it's in the bank account, just making sure, your bank or credit card, and that's feeding into your software and just making sure it gets recorded to the right line item. If you're using a spreadsheet, maybe you're earlier in your business adventure and you're still using a spreadsheet, that's fine too. Usually when most of our clients that still use spreadsheets, we're exporting the bank data or the bank statements, and then we're labeling. What you're going to label for most of your dining food expenses, you're going to have a line item called meals 50%. Okay, meals 50%. And most of our meals are only 50% deductible. So you're going to put the whole amount in there. All right. And then on the back end, on the tax end, we'll calculate the 50%. But so this is all those discussions, those business meetings with partners, vendors, clients, potential clients, the eating out alone while traveling, the food provided at the workplace. Those are all 50%. That's pretty across the board. There are 2 exceptions that make food 100% deductible. And I want to see a line item that says meals 100%. All right. So meals 50%, meals 100%. If you only have one meals category, you're most likely it's all going to be 50% deductible. So if you have any of these 100% deductible items going on, make sure you create that separate line item. So those exceptions are, so 100% if you have food at an event or presentation, okay, for customers. So think wine and cheese at an open house, or food at a booth. Maybe you're at a farmer's market, or maybe food at a training or a network event that you're hosting. That type of food is 100% deductible. So meals 100% is how you would record that on your P&L. And then 100% food for employee events. So if we're having an annual celebration, a holiday party, end of tax season party, maybe we're doing training. Maybe I do daycare and we have to have an annual CPR training. So after CPR and first aid training, we're going to do dinner. All right. Those are 100%. Okay. I'm at my 30 minutes and we have not gotten to go to travel. I'll just go late. I'm trying to decide if I wanted to split this up, but then I'd have to redo everything. Okay. So this training's long. Sorry, guys. So that's meals. Now we're going to move to travel. So for travel, again, this is like my favorite. And this is one where if you don't have any travel deductions, you have a huge opportunity to move some post-tax dollars to pre-tax dollars. All right. So qualified document report. So to qualify, again, your travel must have a business purpose. Okay. You've got to be meeting with a client or meeting with a vendor or attending a conference or a training event. That's a big one. Many of us are in some sort of industry where there is some sort of training available, whether it's in our industry specifically, right? I'm going to a tax conference, or if it's just for business, right? I'm going to a business scaling event, or maybe I'm going to a training on building a real estate portfolio because that's my vehicle. All right. Whatever it is, find a conference or training event to attend. Check on your rental property. If you have rental property outside of where you live, checking on your rental property makes that travel a business expense. I always tell people, if you're truly building a rental portfolio, buy property where your kids are or where your parents are or where your grandparents live so you can travel. You might have renters in there, right? You don't have to stay in your rental property, but if you're going to visit, your parents or your kids or your grandkids, and you also go and check on the rental property to make sure it's legit, then you're going to be able to make some of your travel deductible. All right. Another one is hold your annual board of directors meeting elsewhere, especially if your board of directors is you. If your board of directors is just you and you decide you want to have your board of directors meeting in Florida, okay, I can go to Florida for a day, or we'll talk about like the timelines of days or two. I really should have made this 2 trainings. Sorry, guys. And we get to make part of that deductible. You might, if your board of directors is you and your spouse, that's one of those things we always tell people, like put your spouse on your board of directors because then their travel also becomes deductible. There are ways to make partial business trips. Like if you can make a trip partially business, then you're going to get to expense part of that. We'll circle back around to that because that's a little bit more complicated. But again, if you do not have any travel deductions on your P&L, on your business profit and loss, there's a huge opportunity for you to get some deductions. All right, so what expenses are included? So what's included? So if I'm going to a conference, right, I am going to San Diego for a 3-day accountants conference. So what is included? My airfare, my hotel or my Airbnb, my rental cars or my Ubers and Lyfts, my parking if I have a car, taxis, tolls, trains, whatever transportation I choose to use. Food while I'm there. Again, it's going to be deductible to that 50% like we talked about above, but it's still a business expense. All right, so those all fall in the bucket of deductible travel expenses when I'm traveling for a business purpose. All right, so the second part is document. So what do I got to do to make this a legit, what do I got to do to document this as a legit business expense? When I'm traveling for something that is 100% business, I want to pay for it on my business credit card, 100%. All right. When we're traveling and we're splitting it between business and personal, it gets a little trickier, and you want to make sure that you account for the business personal split. But for beginners, we're just going to start going on trips. We're going to start finding conferences to go to, or maybe out-of-state clients to go visit. Whatever, that's our first step. It's just how do we start going to places and making a business deduction? So meeting with clients, meeting with vendors, we already talked about that. So document what you're doing. Again, hold your calendar, right? Keep your calendar. Again, for those of you that struggle with keeping a calendar, this is going to be a learning curve for you, but this is so important for especially these two expenses, okay? Meals and travel. So travel, I'm going to mark it off on my calendar. I'm going to say I'm going to San Diego for the accounting conference for Wednesday, Thursday, and Friday. And that way, if and when I get audited and they dig in and they see the travel expenses for that span of time, they see that's on my calendar. They're like, okay, that makes sense. All right. So, so the reporting part of traveling, again, just like we broke out, meals as a line item, it's just a line item on your P&L. It's going to be travel. All right. The only piece of travel that has to be broken out for tax purposes is meals. So travel meals, 50%. All right. Everything else you can just bulk into travel. Some people want to see, like, I spent this much on lodging, I spent this much on transportation. That's fine. You do you. But from an accounting or from a tax point of view, I just want to see travel and I want to see the meals broken out. That is it. All right. So a few bonuses on the travel piece. So we talked about combining business and personal. So for example, let's say I'm going to that conference in San Diego, okay, for 3 days. It's Wednesday, Thursday, Friday. So, but let's say my sister lives down there. So I want to stay a couple extra days and hang out with her. Okay. So what's a business expense and what's a personal? Because it doesn't all get to be deductible. And a lot of people just think, as long as I'm going for business. But think about that on a bigger scale. Let's say I'm going, to San Diego for a 2-day conference and I'm staying for 10 days. You don't get to deduct the whole 10-day plan or the 10-day vacation. Okay. So what's deductible and what needs to be allocated? Okay. So travel, your airfare there, or however you get there, most of us fly, you take the train, you drive, whatever. The travel there and back is 100% deductible, regardless of how long you go. Because whether I go just Wednesday through Friday for the conference, or I go a week early, hang out with my family, and then come back after the conference, I have to get there and back. Okay, it doesn't matter when I go. I have to get there and back. So travel there is going to be 100% deductible. Okay. Your everything else, it's going to be deductible for the part of time you're considered doing business. Okay. And so what does that look like? So a working day generally constitutes 4 or more hours in a day. All right. It does not include, hey, I'm on the beach working. Okay. That's not a work day. What it includes is days at conference. So if I go out on, let's say the conference is Tuesday, Wednesday, Thursday. Okay. I changed it. I go out on Monday. I'm at conference Tuesday, Wednesday, Thursday. I come back Friday, 100%. Because you get a travel day on each end, and those 3 days of the conference are considered work days. So even if I do some other fun stuff while I'm there, I go have dinner with my sister, or go to the beach with my nieces and nephews. I don't even have those guys. I'm just giving you an example. it's all still 100% deductible in terms of the lodging, okay, the meals while I was there for myself, and all any travel I had to pay for, to get to the conference or to the airport, anything like that. Okay. So working day generally constitute 4 or more hours in a work day. All right. Um, if you are traveling with a spouse or a kid, all right, again, it can be deductible if they work in the business, right? If we've hired our kids and we're going to, I don't like the conference idea, but let's say we're going to, I mean, if you take them to the conference, but let's say we're doing our board meeting, right? We're doing a team meeting or team retreat. There we go. Boom. Team retreat. Team retreat. And I'm taking my kids. They work for the business. I can expense their travel. That's always kind of a stretch. Always talk to your accountant about that. Some accountants are going to be like, no, I don't think it's a gray area as long as you have the support. Like, here's my kids. They work in my business. This is what we did. But some people don't like to be that gray. Board meetings. If you and your spouse are on the board of your business, then their travel is also deductible. Rental properties. Spouses should be on your board of advisors for your real estate portfolio. Even if they're not a partner in the ownership, if it's just you and you have an LLC under your name, they should still be on your board of advisors so that you can have a board meeting that includes them. So those are ways to kind of get your spouse or your kids' travel taken care of and make it a business expense. Otherwise, theirs is not deductible. All right. You can also do per diem. You can take the greater of actual versus the per diem rate. Per diem rates are based on where you're going. So you have to look them up. Super easy to Google. Say what's the per diem rate for San Diego zip code, and it'll tell you for each day you're there. That's the amount you get. As a business owner, I'm going to expense everything through the business, but then I'm going to have my accountant look. And if the per diem is higher than what I actually spent, you can make a journal entry to gross that up. A little more complicated, but it's another way to save some dollars. All right. And again, food and dining is only 50% broken out. One more bonus on travel. All right. Weekends, typically not going to be a business deduction because you're not usually doing business on a weekend. But if you can sandwich a weekend between business 2 working days, you can deduct that as well. So let's go back to, I'm doing my CPA conference Wednesday through Friday. All right. But then let's say I have a client in San Diego and I've scheduled to go meet with them at their business on Monday. All right. Now I can fly out Tuesday. I can go to my conference Wednesday, Thursday, Friday. Saturday and Sunday are now deductible because they're sandwiched between the end of my conference and my meeting with my client. I go to my meeting with my client. I spend at least 4 hours, right, talking and meeting with them on Monday, and then I come home on Tuesday. And I've just made 8 days. I've made an 8-day trip out of a 3-day conference and a half-day meeting with a client on location. All right. Obviously, that's not always going to happen. But again, it's a way to start thinking creatively. Okay. If I have a client that I would love to go meet in person who's in Florida, I'm going to do a search for a conference, a business conference, an accounting conference, some sort of conference that takes me down there, and see if I can get creative with how long I can go down there and visit. All right. So that's travel. All right. I went over, I thank you guys for staying late. I really try to keep these to 30 minutes, but there was a lot to cover today. Should have broken travel and meals out separately. You live, you learn. Next week, I think I said business use of vehicle, but I think we need to do home office first. Home office. So we're going to talk about the home office deduction. Or we're going to talk about what it is, what we need to do to take it, and also the stigma. I get a lot of clients who come over and say, my last accountant told me it wasn't worth taking the home office because home office gets audited more than people who don't take home office. And we're going to talk all about that next week. All right. So thank you guys for joining me on this Thursday, and I will see you I will not see you next week. I will be at a wedding. I will see you in 2 weeks. All right. Bye, guys.